Hello students, good morning and welcome back to the online class. So we'll continue with the illustrations on consignment accounts. So we are solving 24 marks problem, right? So take down next problem. So take down fast. Okay, so it's similar to previous problem. So similar problem. So the Alarm Company Limited of Punjab dispatched 1000 wristwatches costing rupees 900 to the agents of Mangalore Times Limited. The pro forma invoice to Mangalore Times Limited was 1200 per watch and the commission of 6%. So Alarm Company, Alarm Watch Company, that is of Punjab, that is from Punjab, dispatched the goods. So the Alarm Watch Company is the consignor and the Mangalore Times Limited is the consignee. So this is the invoice price 1200 and 900 is the cost price. So the difference is the load price, that is 300. So you have to pay 6% of 6% commission of gross sale proceed. Okay. So 1000 wristwatches were remitted, that is consigned. The agents accepted the bill. Bill means the bills receivable, that is for 3 lakh. And Elram Watch Company Limited incurred the following expenses. All are non-recurring. In transit, 100 wristwatches were totally destroyed, that is abnormal loss. 45,000 were duly received by Alarm Watch Company from insurer in full settlement. So this you have to take it in the abnormal loss account, that is 45,000 credit side. The consignor received an account sale from the agent showing that 700 watches were sold for rupees 9,80,000. For rupees 9,80,000. So 9,80,000 is the total sale value. It is the total sale value. And they paid custom duty. Now what is custom duty? So custom duty is nothing but it is the tax on the goods which cross the borders. So it is like a freight. Okay, it is like a freight, sorry, it is like octroi. In the previous class we had octroi, but custom duty usually it is imposed on the international borders. So it's a tax imposed on the goods which are transported across the borders, but custom duty usually it is charged between the countries. Okay, but I think it by mistake it was given as a custom duty, or don't know, because it is crossing the border of the state, not the international border. But we will take it as a custom duty only. So custom duty usually it is between the countries. If you are taking the goods, then the tax charged is called custom duty. The custom duty is the non-recurring, because only when you bring the goods you have to pay the tax. Clearing charges, it takes place only once. When the goods is brought, the clearing should be done. Clearing means you have to remove the goods from the vehicle. So clearing charges and custom duty is the non-recurring. Warehouse rent is incurred after the goods are assembled in the warehouse. Sales expenses after assembling, then you sell, the sale expense incurred. So these two are not recurring in nature, but custom duty and clearing charges are non-recurring in nature. So you have to prepare necessary ledger accounts in the books of both the parties. So I give 3 minutes to calculate the abnormal loss, the value of abnormal loss, that you have to do now. Okay, you have to do. So calculate the value of abnormal loss. Just 3 minutes. Do it fast. Check your answer. So first you have to take cost of goods lost. So cost of goods lost, that is 100 is the units that is lost. The cost is 900. You have to take the cost price. Then you have to add the proportionate non-recurring expense of consignor. So total expenses of consignor, total expense incurred by the consignor is 12,000. So you add these three figures, 12,000. It is for 1000 wristwatches. 1000 wristwatches. You want it for 100. So cross multiplication, you will get 12,000 into 100 divided by 1000. So it comes to 1200. So the goods has been lost in a transit. So proportionate expenses of consignee is not added because he has not received the goods. Okay. So we are not adding proportionate non-recurring expense of consignee. So the sum total of that is the value of abnormal loss, that is 191,200. Okay, next we have to calculate the value of consignment stock. Okay, so calculate fast. Again 3 minutes to calculate consignment stock. Okay, check your answer. Okay, so it is invoice price of goods unsold. You have to take the invoice price, that is 1200, and the unsold units is, so 1000 units consigned, out of which 100 were lost in transit. So only 900 900 wristwatches has been received by the consignee. Out of 900, consignee sold 700 watches. 700 watches in the sense the remaining number of watches is 200. So 200 units into 1200, it comes to 2,40,000. Then the proportional expenses, that is 2,400, 12,000 into 200 by 1,000. Now see here, when you are calculating the proportionate non-recurring expense of consignee, it is not total units, it is the units received by the consignee. See, consignor has sent 1000 wristwatches, so he incurred the expenses for 1000. But consignee received only 900 watches because 100 were lost in the transit itself. So consignee incur expenses only for 900. How much he received on that? How much he received on that? They will incur the expenses. So it is 900. So if you return it as 1000, you correct it, it is 900. So it will comes to 4444. If you add, you will get 2,46,844. If you done it right, then you prepare the ledger accounts in the books of consignor. So write in the books of consignor, that is the Alarum Watch Company Limited consignment. So consignment again you have to do. So entire problem you have to do in the today in this class itself. So I will give 5 minutes to solve to do consignment account. So prepare consignment account fast. So do it fast. So check your answer. See, two goods sent on consignment. That's the first thing. That is 1000 into 120. You have to take the invoice price 12 lakh. So the consignor incurred some expenses, that is freight, carriage, and insurance. So you have to add and you have to take it to the outer column and you have to write to bank because the consignor's books of account. We are preparing the ledger accounts in the books of consignors. So you have to write to bank. Then consignee has incurred some expenses. So you have to write Mangalore Times Limited on the debit side. Custom duty, clearing charges, warehouse rent, and sale expenses. Four expenses. So total 35,000. Then you have to there is an abnormal loss. You have to write on the credit side. We have already calculated what is the value of abnormal loss. Then there is a sale. The total value of the sale is given. Then the commission. After recording sale, you record commission. Okay, online like 80,000, 6%, 58,800. So before writing the closing stock, the one more entry that you have to pass on the credit side, that is the load entry. So see that debit side, the first thing, that is goods sent on consignment account, that's a load price, that is of 300. Invoice price 1200, cost, actual cost 900, means the difference 300 is the load price. So on 1300 you have to calculate, sorry, on 1300 per wristwatches you have to calculate, that is 1000 into 300, it comes to 3 lakh. So that you have to write it as buy goods sent on consignment account. Next you have to record the closing stock, that is consignment stock account 2,46,844. Again on that there is again the load price, right? Because you took the invoice price as a base. When you calculated the value of consignment stock, you took invoice price as a base. So it is we have to calculate the load price on that. So the closing stock units, that is 200, see working note number 2. On that 300 at the value at the 300 per wristwatches, so into 300 it comes to 60,000. So the difference is transferred to profit and loss account. So the total 16 lakh 18,044. So if you done it right, then you go for the next ledger account, that is consignee's account, that is Mangalore Times Limited. If you made any mistake, you correct it, then you move to the next one. Okay, so I will give 5 minutes to prepare the next ledger account, so do it fast. So next one, that is Mangalore Times Limited. So do it fast. Okay, check your answer. So first you have to write to consignment, that is the sale of wristwatches. Then the expenses and the commission, that is by consignment 35,000 expenses, by consignment 58,800, that is the commission value. Then they have drawn the bill of rupees 3 lakh to Mangalore Limited. So 3 lakh on the credit side. The settlement amount, that is by bank 5 lakh 86,200. That is a balancing figure. So next ledger account, abnormal loss account. So do it fast, just 2 minutes. Do it fast. So check your answer. That is to consignment. That is on the in consignment account. Credit side you have written it as by abnormal loss. So here it is to consignment. Then you have received the money from the insurance company. The claim what you received, that you have to record here. So in abnormal loss you have to record that. So that is by bank 45,000, by profit and loss account 46,200. That's a balancing figure. So next one, that is goods sent on consignment. That is very easy. That is first you have to write by consignment, then to consignment, that is load price, the difference to trading account. So by consignment to consignment means the both the entries that is there in your consignment account. Okay, so copy down this and go for the next ledger accounts in the books of consignee, two ledger accounts. So do it fast. So in the books of Mangalore Times Limited, that is consignee, you have to prepare consignor's account, that is Alarum Watch Company Limited. This is just opposite to your consignee's account. Okay, just see there, in your consignee's account, you written it as two consignment. But here, instead of consignment, you are writing bank, because here the actual payment and the receipt of cash takes place. Okay, because the Alarum Watch Company has to receive 9,80,000 from Mangalore Times Limited, so you are written as by bank. The Mangalore Times Limited will receive 35,000, that is an expenses from the Alarum Watch Company, so you write to my bank, because Alarum Watch Company has to pay that much of money. Alarum Watch Company has to receive 9,80,000 as a sale value, right? So see, consignee Mangalore Times Limited has sold the goods for 9,80,000. Now who has to receive the money? It is actually the consignor has to receive the money, right? So in a consignor we write by bank, because the actual cash should be received by the consignor. In consignee's account, we written it as a two consignment, because it is a consignment process. He is not the real owner of that asset, sorry, real owner of that goods. So it is two consignment. But here the actual receipt and the payment takes place. So the Alarum Watch Company is the person or the consignor, or the is a consignor or the person who is going to receive the actual sale figure. Here the actual sale figure is 9,80,000. Now he is receiving 9,80,000, but he has to pay something to his consignee, right? Because the consignee has incurred some expenses just to sell the product of consignor. So he has to pay some money from his pocket. So it is nothing but to bank, because cash goes out. And it is to commission. Why commission we won't write bank? Because he is not making actual payment immediately, but he should know what is the profit or loss incurred because of that, incurred in that consignment. So commission, as it is paid on the sale directly, the calculated on the sale figure, first we'll take that into the profit and loss account, because the sale should be recorded in profit and loss account. So we take that commission to the profit and loss account. So we write to commission, and it's a bills payable, because consignor, before selling the goods, you already drawn 3 lakh bill on consignee. In a sense, what price you are going to sell, it is left to you, but 3 lakh you have to pay immediately, and I am drawing the bill. 3 lakh you have to pay. Means it is an agreement between the consignor and the consignee before selling the goods. Means that 3 lakh consignor we already received or yet to receive, correct? So that you have to set aside. Then the difference, what 5,86,200 is the actual amount that the consignor receives after adjusting everything. Okay, so next one, that is commission account. So by Alarum Watch Company, because here it is to commission, here it is by Alarum Watch Company, and it is transferred to profit and loss account. Okay, so this is illustration number 11. And this they asked in the semester examination also. So once again, you see, go through this problem. Okay, so I wind up today's class till here, and the remaining we'll see in the next class. Okay, have a nice day. Bye.